pipeline remains strong with over 40 active projects under management, including 10 already in active implementation across key sectors such as transport, energy, urban development, and the rest. We continue to strengthen our legal and institutional framework governing infrastructure, financing, and PPP structuring. Our PPP models prioritize clear and balanced risk allocation supported by appropriate government backstopping mechanisms to ensure Kenya remains a stable and reliable destination for long-term capital. Kenya's macroeconomic framework remains resilient despite global volatility. As already been said, we have a fairly stable macroeconomic indicators over the last 3-4 years, including inflation, interest rates, our cash reserve ratio, and all the other indicators of macroeconomic stability. We have every intention as the government of Kenya to make sure that those fundamentals remain stable, to encourage investors to put their money in Kenya, whether in local currency or in foreign currency, without bringing losses in terms of currency fluctuations. We are also assuring all investors of political stability, long-term political stability, and I can assure you that we as government are committed to ensure that our stability is long-term, and we'll make the right sacrifices and the right decisions to impact negatively on long-term political stability. The same we are doing for our economic stability, as I've already said, making sure that the fundamentals of macroeconomic stability remain stable in the long term. We are also encouraging private equity and venture capital to take an interest in our vision for Kenya's future, which has already been clarified and is being worked on, which centers around 3 pillars. The first one is we have an ambitious infrastructure program for the next 10, 15 years, 20 years maybe, to make sure that we modernize our roads, our airports, our seaports, our railway system. And we have come to the clear conclusion that this ambitious infrastructure upgrade program of roads and railways and airports and seaports cannot be achieved by increasing revenue through taxation or piling up more debt on our country. Instead, we have mobilized public resources, which we are investing in the modernization of this ambitious infrastructure upgrade program, but we are partnering with the private sector, and that's where you come in as private equity and venture capital investors. We want to invite the private sector to crowd in the National Infrastructure Fund, which we have just finalized the law, and we've already started harnessing seed capital from privatization and from transactions in the capital markets of government assets. And we want for every $1 to crowd in, hopefully $10 from private sector to help us move forward our infrastructure into the more modern space, because we've realized if we continue at the pace in which we have always handled our roads and airports and railways and seaports, we will take a long time to reach the destination that we aspire to reach. The second pillar is energy. As you are aware, Kenya is a green energy economy, largely one of the most green energy mix is found in Kenya. 93% of our energy is green energy. We are looking at 100% green energy in the foreseeable future. But that's not enough. Our energy quantity, the quantum, is small because we have an ambitious industrialization program as part of defining our future. And that program of industrialization will only be realized if we produce more energy. So we have a target of producing 3 times the energy that we have at the moment in the next few years. And we are encouraging green energy investments because we are clear on our energy transition priority. Therefore, these are opportunities for you. And when I say green energy solutions and investments, I'm also including associated investments, including e-mobility as we transition our energy consumption in our country. The third pillar of our future is around agricultural transformation, water harvesting, value addition in the agricultural sector, and we believe that we want to put an extra 2.5 million acres under irrigation, and that will require us to invest in quite a bit of water harvesting facilities. And we are doing all this to seek capital from the National Infrastructure Fund, but inviting private capital on the assurances that you manage trade in the long term, you take their profit, and that journey, I think this will not be, this is the best forum for me to advance that opportunity. Therefore, those 3 pillars of our infrastructure upgrade in the transport and logistics space for trade facilitation, the number 2 energy, the number 3 agricultural transformation, including the industrialization value addition agenda, is what the National Infrastructure Fund is all about. And we started that journey. We are not starting next year, we are starting now. And we are quite underway. We are looking at the road sector, for example. We are looking at 28,000 kilometers of new roads in the next few years, through PPPs, and out of which 2,500 kilometers through expressways. We are also looking at 10,000 megawatts of electricity, as I'm saying, most of it green energy investment. And we are also looking at extending our railway, which we are already doing, to modern Uganda. We are also modernizing our food seaports in Mombasa and Lamu. All this through PPP, which is crowding in private capital to come and support our investments through the National Infrastructure Fund. We are also finalizing our sovereign wealth fund law, which has a component also for some of the things I've already said. Also, one of the purposes of the sovereign wealth fund to underwrite the Kenyan economy from global shocks, like what is happening currently. We had COVID a few years ago, which affected our macroeconomic situation. Right now, the war in the Middle East is another shock that we are aware of what it can do in terms of undoing some of the achievements or progress that we made. So the Sovereign Wealth Fund will have a component to cushion the nation from such shocks, whether external or domestic shocks, whether, for example, sometimes part of that system, but also there will be part of that profit will be invested in public assets that bring back revenue. And of course, the third component of the sovereign wealth fund will be reserved for future generations, so that as we extract our raw materials, our minerals, everything else that we have. We don't want our grandchildren 100 years from now asking us what happened with titanium, for example, which was available in Kwale. Where did that money go? We cannot use the process, for example, from the extraction of the titanium and the cost to pay salaries and buy vehicles of public office. That's wrong. We will use it, push the economy from shocks, another part, invest it in high return public infrastructure programs, like some of the ones I've said, and then the other component will be reserved for future generations. Those are the areas. Of course, finally, as you're aware, we have our traditional high points for investments by private equity and venture capital, the people, fintech, financial services, technology. In a nutshell, that is what we think we could do, and I've requested the leadership of the association and all the stakeholders in this space that today is such a short moment. We cannot canvass all the issues that we need to canvass here. So I requested for a broader, more structured engagement. And I bring greetings to President William Ruto, and sure that whatever proposals you have, we will support you to make sure that our policy is aligned to the win-win outcomes that we look for as private sector and public sector, and also that some of the things that support some of the reforms that we're looking for, I think we will be looking forward to further engagement, triangulate all the issues, and push them to actualization. Thank you very much. Have a good afternoon. Open. It is open.
Thank you very much. We are required to take our seats now. Your Excellency, you are invited for a quick fireside conversation with Madam Christine Minor, who is now joining me at this juncture. So, a chair has been provided for you, Your Excellency. This is one of the major requests that the investors had. It is very short, Your Excellency. And right after that, we will have a quick photo opportunity between yourself and individuals that I will mention. Welcome, Your Excellency.
Thank you very much, Your Excellency, for making time to join us at this conference. I think, as we had mentioned before, we're very privileged to be hosting the Africa Private Capital Conference in Nairobi. The last time that we convened in Nairobi was 2019, and I believe from the CEO we have a bigger crowd this time, and so it's truly a pleasure. Mine will be very short, and because the investors wanted to hear from you. And what I'd like to ask is, you've spoken about the role of technology and public-private partnerships as the defining force for the next generation. Now, for fund managers and institutional investors in this room, thinking about a 10-year horizon in Kenya, what would you say is the single most exciting thing about where our country is headed?
The opportunities are infinite, as I've said, in the space of public-private partnerships. Because where Kenya's vision is at the moment, all the pillars of our growth into the future will require public-private partnerships. The government, the public sector does not have enough financial resources or even ideas. They are not enough with the kind of ambition that this country has into the future. So we have determined for ourselves that we should be able to make it our business to provide an environment that encourages private capital to flow into this space of public infrastructure provision. So the biggest opportunity, as I've said, lies in public infrastructure, roads, railways, airport, and the technology around it, plus also the areas around agricultural value addition, transformation, and so forth. So the future is very, very good, and we are not doing this just by providing policy and regulatory clarity. We are investing ourselves in the assets that we are inviting private sector to put their money in. So we will be the first people. So we co-own the assets and the investments. So as government, we have a responsibility to protect that investment, even as we invite the private sector to put in their resources.
Thank you, Excellency. You did mention something to do with domestic capital, and our theme for the conference is breaking the mold. And that means that we're looking at new approaches of growth and investment. And we've also talked about 2.8 trillion within the pension funds. And to be actually very accurate, we only have 0.7% that has been deployed to private capital. And I know we had conversations about policies that can be looked at to make sure that there's more deployment. But my question is, how would you say Kenya is breaking the mold in mobilizing domestic capital for national development specifically? And what achievement or plans from your administration would give confidence that local investors would play an even bigger role in this country's growth?
Yes, mobilization of domestic resources, domestic capital is at the center of our vision into the future. What has this government done? It may interest you to know that we have tripled our pension savings, almost tripled, 2.5 times, or double actually, doubled. What we have collected in terms of pension savings in the last 3 years is slightly more than what we had collected over 60 years of Kenya's independence. It is that profound. So we are very confident that going into the future we have enough resources from Kenya mobilized locally, which can be deployed, as you said, to give the solutions we are looking for. So we want to see how that space is able now to be able to be deployed. We may also want to know, for example, one of the major infrastructure projects, road infrastructure project that we are doing at the moment, just outside Nairobi, we are building a dual, an expressway to some town about 200 kilometers away called Nakuru. And part of that project has been underwritten by Kenya's pension fund savings, something which could not have been thought about before. So I think it's important for the people around this room to see what else we need to do to make sure that we mobilize enough domestic resources. And as somebody said here, domestically mobilized resources is not in competition with externally or international flows of resources. I think the two of them are complementary, and a healthy balance is good for economic progress of Africa and of our country.
Thank you very much. I think I've been signaled that my time is up, but thank you very much for the engagement.
That was so quick.
I have another question if you have time. I have one last one. Yes, one more, right?
One more.
Thank you.
Can you ask me 2 questions?
or maybe from the audience, somebody I can remember.
Yes, I think maybe my last question, and this ties in also to what you mentioned, as Kenya is positioning itself as a leading investment destination for Africa. What would you say has changed or improved in the environment for private sector, especially in building policy from the government side? And would be the one thing or two things, or what has changed over the 2 years that would give confidence to the investors in the room to consider Kenya and also maybe consider East Africa as a destination for investment?
Several things. We have not changed our taxation. We have not increased taxes the last 2 years, now going to the third year, and we don't intend to make new or to introduce new taxation measures. What we are concentrating on now is perfecting tax administration of taxpayers who are already supposed to be paying the existing taxes. That predictability we think is important for people who want to invest their capital in Kenya. The transition, the tax administration reforms or the tax-related reforms that we are making will help us raise enough revenue without introducing new taxes. Number two, we have improved our PPP legal framework, which for many years was unable to deliver through projects into fruition. And I think now that's sorted out, and whatever else needs to be done is, I think, work in progress. Number three, we are also, as I said earlier on, making sure that the fundamentals like stabilizing the currency and making sure that we cushion investors from currency-related volatility and losses. For me, that's a very important policy move that should assure investors a long-term return. And finally, of course,
what was it? When to buy shares?
In the past.
Is that good enough?
Yes, and that's a good way to edit. That is going to be political stability even as we look forward to next year. Thank you very much.
Photo opportunity, so let us kindly clear the stage. The first photo, Your Excellency, we have Mr. Dan Ladi, the chairperson in Africa. We will also have Ms. Abi Mustafa. We will also have David Owino, chairperson of the Africa. By CEO of British International Investment, CII, and the CEO at BIO. No kindly name, you will be joined by this gentleman. If in case the announcement, Your Excellency, at this juncture, you are allowed to leave at your own pleasure. We will let His Excellency the Deputy President leave at his own pleasure as we remain seated.
This isn't just any chat, it's ClickUp chat. Sure, you can tag your team, ask questions, and even drop an emoji. But the real magic is how it connects to the rest of my work. I can tag a task, a doc, or a whiteboard, everything I need in one place. This goes both ways. Chats can also be referenced inside tasks to let people join in on the fun. A chat might be connected to a project, so I can see my lists, dashboards, and docs side by side.